Welcome to the April 6, 2018 video version of the Wagner Daily. My name is Rick Petticelli. In this video, we're going to cover broad market conditions, current open positions, and take a look at a few setups we're looking at while while we wait for broad market conditions to improve. First up, the market timing model is still in a sell signal. That's because we have yet to see a follow through day in the Nasdaq or S&P 500, and all major indices are below the 50-day MA, and the 50-day MA, I believe, is trending lower in all the indices as well. All right, so the S&P. Oh, also keep in mind we're gonna S&P futures, Nasdaq futures, and Dow futures are down about 1% as of this video, so we'll try to keep that in mind as we go over the broad market averages here. So the S&P broke a short-term downtrend line on Wednesday with its first full day of buying. There was buying throughout the day. Volume wasn't strong, but buyers were willing to step into the market all day long, and that's the first time we've seen that in a while. That's a positive, but still no follow through day. So 1% lower would put the SPY at 263, 262.70 around there. So on the gap down, if the gap down holds at least above the 10-day MA, maybe, which I believe is like 262.20, and we could have a shot to recover and then push back up into resistance here of the 50. If not, there could be another test of this 200, and if that doesn't hold, then look for the dip below the prior lows. Nasdaq Composite, so a 1% sell-off from the close. We have the Nasdaq Composite around 7,000 or 69.90. Yeah, 69.90 around there. Let's take a look at the hourly chart, give you a better idea of what we're looking at here. Below 7,000 is the 20 EMA on the hourly. So there is some support in this 6,900. It's going to open around 69.90. If it does, support would be 6,900 right here. This prior lows right here and this chop in this area. If it can't hold 6,900, then a test of the 6,800, and then we could have that dip below the 200 AMA to test this prior low. The Russell 2000 is in much better shape than the other indices. It's still just below the 50 MA. Looks pretty good. Unless it breaks down below 146.50 and can't recover, I think overall, it's constructive action. Dow is the only index to undercut the prior swing low. I think as long as it stays above this 234 area here, and this is on the Dow ETF, as long as it stays above 235, it should be fine. And again, if it were to sell off back down to 235 and then dip below these lows for a day or two, that too would also be okay. We just don't want to see the price action bust through this 200 AMA, stay there for a few days, then bounce up, and then sell off again. That would be bad news. Okay, FND, pretty amazing move given how ugly the market's been. And we have a sell stop in place just around 56.45. It's really tight, just to guard against a reversal here for half the position. The other half, we have a really loose stop, and we're looking for the price action to hold above this uptrend line here. And on to open option positions. Marvel off the 200 AMA, false breakout, sort of what we could end up seeing happen in the Nasdaq with the undercut of the prior low, but we'll see what happens with that. But I think this is where you could see a base form, and it could take a few months here for it to round out if it can hold above the 200 MA and push higher. And that probably won't leave our May call enough time to work out as we would have expected. We'll see if we can get any kind of move up into this 23 area, and we might be able to sell into a bounce. MVCR, we have a pullback into the prior low in the 200 AMA. Overall, the price action still looks constructive. Obviously, the breakdown below the 50 MA means it's not ready to go right now. But as long as it can hold above 1930, and for the most part stay above 20, I'd say above 20 in the 200-day MA, continue to chop around, we still have a shot to be in the money or much higher, depending on market conditions, in September. This is a September expiration. CCL, break of the 200-day MA was not ideal, but if it can hold this big support level at 64, it could have a shot of staging a comeback, especially if it can break this downtrend line and bust through the 250-day MAs. That is a July expiration, and URA is a April expiration, and I believe that would be 2 weeks away. And unless we get some kind of miracle, it'll probably expire worthless here. In terms of new setup, so we're looking at BZUN. Hopefully, it can hold the 50 MA, and this is something we'll continue to look at. It's not actionable right now, but it's something we're keeping on our watch list because of the powerful gap up here to new highs. 5 looking pretty good. If there's any sort of gap down tomorrow to this 72 area, any type of weakness on the open, that could be a potential buy with the stop for partial or full size beneath Thursday's low. And if it can push through the 2-day high, it could be significantly higher over the next few weeks. FCN, pretty strong gap up here. If it were to go sideways for a few more days and then break out, that could be a potential entry. Goose we really like, especially if it can go sideways for a few days here. Volume has yet to really come back into the stock, as it's been well below average the past few weeks. HLNE, a move through range highs here could potentially put it in play. Home was an unofficial buy in chat room this morning, and it held up well on big volume. Just have to see if it can remain above the 3330 area tomorrow morning. INVA, really nice setup here, broke the downtrend line. Volumes dropped off the past 2 sessions. If it can clear the 2-day high, that'd be a great sign, and then punch through this swing high. Stop would be about 4.8% away with 1, 2, 3. I wouldn't call them all reversal bars, but clearly you see that they're supported the 20-day EMA. So if it were to punch through 17 and then go back below 1620, that would be the sell signal. All right, thanks for watching. If I don't talk to you tomorrow in the chat room, have a great weekend, and I'll see you Sunday night.